Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we also will take a look not at the euro currency because yesterday market in fact has stand at the same area where it was before the independence holidays, and in fact the analysis that we have prepared in our weekly research doesn't demand any update right now. That's why guys today probably we will make the brief look at other currencies, particularly speaking on the Canadian dollar and just snapshot on the Australian dollar that we have discussed on Friday. We said that if you remember this, we have announced the some possibility for scalp trading on Australian dollar due to the statement of the governor of the Australian Central Bank. The Aussie has plunged significantly, and that was the reason and the chance for Jordan momentum trading, for example, for double repo buy pattern. We said take a look, that market really could show some pattern here, and here we have excellent looking double repo buy that we have discussed in our update on the previous week on Thursday, and you could see that market almost has hit the target. So if you have taken the long position based on this double repo buy pattern, you probably should watch for this area. So the 93.95, 94 even area. It's 1618 extension from the bottoms of the double repo A, B, C bottom, 1618 here. For others, you also could watch for possible scalp short position here, because that will be an agreement at confluence resistance and 4-hour confluence resistance. That was really significant plunge down, and guys here some momentum trade could start with at least the half of the way to move down, because this momentum is still valid and it will press on the market just as the impulse move based on this action. So I will not be surprised if market will react and will feel the impact of this previous bearish momentum on the current situation, and could show some downward action at least to the 50% of this move up. That's also possible, but I'd not call you to trade this. I just share with some of my thoughts based on the scalp situation, very short-term situation on Australian dollar. Major thought here is, if you have the bullish position based on the double repo, think on closing it, on taking the profit at the 94 even area. But that's just a snapshot of the Australian dollar. Our today update will be dedicated to the Canadian dollar, to the loonie, and here is why. Because currently the Canadian dollar create some nice chances for immediate and short-term trading compared to the euro currency that in fact calling around, and this calling could be explained by the simple moment that many analysts tells right now that although we have the nice data on the United States economy today and in general in July will start the period of the financial statement on the American companies for the first quarter. There will be a result announced, and July is the very hot month from this standpoint. Also guys, analysts will expect to see the FOMC minutes on June meeting, and at the end of the July we will get another Fed meeting that will be also very significant. So currently the major opinion of the investors will be dedicated to observing how the positive data will impact on the results of the companies. That's very significant. And second, what data will be released on the inflation. After that, all major investors will look for a response of the Fed on this data. So that will be very significant. That's why maybe in the nearest weeks, United States dollar will decrease the volatility, and so it will be some really period of the building and energy for a significant breakout in one or other direction. From that standpoint, the Canadian dollar could be also interesting because this is the currency or the commodity currency, and it also reacts on the situation in Iraq and so on. That's why right now and today we will take a look at the Canadian dollar. Recall what we have discussed in the previous research. We said that market has hit very significant support area. That includes the weekly pivot, the weekly significant fib support, 3.8 fib support. Also, that is the target of this A, B, C top pattern. 100% extension stands in agreement with the fib support. So this creates very solid support area. That is also was the weekly pivot support one on the previous week. What we have right now, our market shows the reasonable bounce out from it. That is the action that we discussed and that we are counted on. And now we see it stands in progress. There are two moments to watch for. First of all, take a look at the pivots. That market right now move above the weekly pivot point and has hit the weekly pivot resistance one. It means that today we could get some retracement right back down out from this resistance. Second, and the major point is dedicated to this thrust down, because that is the object and could become the foundation for the jet upward directional pattern. And personally, guys, I really hope that we will get this bread butter sell setup. So if market with the today and tomorrow will hit 1075 area, that will be nice area to make the short-term bearish trade. So we could take the short position here with the hope that market will pass down the 2/3 of this possible retracement. That is what we will be looking for on the daily chart. If this will not happen, well, guys, here market also could form the double repo buy. That's also possible. But taking into consideration the behavior of the market on the intraday charts, we probably currently should watch for a bread and butter. But if market will fail to do this, we will shift to the double repo. So on the 4-hour time frame chart, we see why this area and why market could start the downward retracement right from the 1075 area. That's not just due to this really significant momentum to the downside. That's of course the major reason. But another reason, stand on the 4-hour time frame chart, you see that here is really significant resistance cluster. 1075 fib resistance, major level of the resistance here on this whole move down. That is also, take a look, monthly pivot point. The July pivot point that hasn't been tested yet, it's 1076 number. Also, guys, slightly higher stands 618 fib resistance, but this is probably too wide to treat it as the confluence. Yeah, I think that really this area, this level, and the monthly pivot point will be enough and sufficient to create the significant solid resistance area, and that could be real. That could become the real barrier that with the compounding action from this resistance and the previous momentum down could trigger the 2/3 retracement after this move up. And finally, on the hourly chart, we have discussed the possibility of the appearing of the double bottom pattern. The reason for that was with this wash and rinse of the previous lows, and we said this is very typical for the double bottoms, but we were not encouraged by this shallow action. This was on Thursday. On Friday, when the market was really thin, that hasn't looked very attractive. So it will be too lazy, too slow action. But take a look what has happened in the recent days. Take a look at this AB move and BC and CD move. This CD move much faster. We see significant acceleration right in the recent trading sessions. It's much faster than this leg. And also market has erased this previous plunge down. So in fact, we see the normal action, normal market mechanics with the double bottom pattern. Also take a look at market has moved above the neckline. It was resistance, you can see this. Market has hit resistance, bounced down, breakout, retesting neckline and moving up. So since market stands at the weekly pivot resistance one, today we could get some retracement right back down, but preferably if market will hold above the neckline. We do not want to see the deep retracement right back down. I hope that market will stand here and will keep the chances on the possible upward continuation. Take a look where the target of this double bottom stands. Approximately at the 1073 area. That is very close to this level. 20 pips difference. So it's not really big difference. So market could really reach this area, and that could become some agreement among the target of the double bottom, fib resistance, and monthly pivot point that could trigger the downward retracement. So here I do not want to call you to trade this on the long side of the market, because the major object here is our chance to take the short position, because we are mostly would like to make the directional trade based on the previous bearish momentum, and we will be watching for 1075 area. But if you trade on the intraday chart, you could try to take the long position based on this pattern with the target around 1073. I don't want to forbid you to do this, but take into consideration the significant risks, because now you will try to trade against the momentum. Based on the daily analysis, we will use this setup. This is just an explanation why market could reach 1075, and our major idea is to take the short position. But if you would like to try to ride on this double bottom and with attempt to move higher, you could do this. Why not? So anyway, wait for retracement and control how market will behave around the neckline. We would like to see that market will hold above it, at least will not move it too deeply below it, and turn to the upside. That will mean that market shows the normal development of the current situation. But anyway, if even this will not happen, the market will fail here, turn to the downside. Well, in this case, we probably will be watching for a double repo pattern on the daily chart. That also could give us very nice opportunity for trading if market really will form double repo here. That's by the way, guys, another reason why it's really risky to trade the double bottom pattern. If it will fail, it will not erase our expectation here, but it will erase this pattern, and you will be trapped in the wrong position. And that's why it's just safer wait what will happen. In fact, we do not care whether we get retracement right to 1075 to get the brand bottom, or market will form the double repo. Both patterns are attractive for us. But this eliminates risk of the possible trading to the upside. So that's just upon to you. So decide by yourself whether you will trade the market on the long side. But in general, the Canadian dollar carries very nice and potential promising setups here. That could be really interesting on the current week.